All right, so the layout of a petty cash book. I said a petty cash book resembles a ledger account with several money columns on the credit side. These are known as the analysis column. The petty cash book, when you are maintaining the petty cash book, it's always on one side, on the credit side, because we are paying. Every now and then, you pay through the petty cash book. Do you get the point? Why do we have every balance on the credit side? We have every balance of the petty cash book on the credit side because the petty cash book is used mainly to pay out. Do you get the point? The only thing that comes in back is the receipt or the voucher, the payment voucher. And note, I said we have the imprest system. What is about the imprest system? The imprest system talks about maintaining the same amount of money throughout the accounting year using the petty cash book. So if you have started the petty cash book in January with 1,000, it has to continue with 1,000 until December. So if at the end of 1 month, you spent maybe 500 at the end of January, so in February, you're not going to get 1,000. You're going to get additional 500 to continue to maintain the imprest system. I think that is clear. So look at the voucher we have here. I think we can look at it together. So this is how the petty cash book looks like. We have the date, that's the date amount, the date at which you are giving out the money, the details, what is the transaction about, the folio, which is just basically numbers, then the total receipt. But here you're not receiving any cash. The only time you could receive cash in the petty cash is maybe you give IOU to a staff. Like I could give you an IOU, you know IOU. I am owing the business, I'm owing you, IOU. So if I'm getting an IOU from the petty cash, let's say I get an IOU of $50 from the petty cash. I have paid out. The cashier has paid $50 to me. But if I pay back within the end of the month, before the end of the month, it will be recorded into the receipt. But you know, it's coming into back. The petty cash has given IOU of $50. Yes or no? It will be recorded on the credit side. Yes or no? But as soon as you are paying back the IOU, the petty cashier will receive it on the debit side. Isn't it? But does any money change? It doesn't change anything because the $50 that you have given out is coming back inside. Do you get the point I'm making here? So sometimes the petty cashier receives money, basically for the fact that maybe the petty cashier has given money to a member of staff, to an employee. I might need a certain amount of money just now. Not that I don't have money, I have money at home, but I need to buy something right now while I'm in the office. I could talk to the accountant to give it to me. Then tomorrow I'll bring back to the account for the accountant. But at that point in time, the money is going out of the petty cash. There has to be a record for that. If not, it becomes a fraud. Because every transaction has to be recorded. It must not be dry posted. You don't just say because he's my friend, I'm going to give him the $50, he should bring it tomorrow. No. Any money that is leaving that cash, any money that is leaving that safe must be recorded. Dry posting is a fraud. Do you get it? So that is why sometimes we have receive. But the receive will become equals to the amount of money that has gone out. So not like any money has gone out. So whatever money that goes out of the petty cash book, of petty cash, would have been replaced with a voucher or receipt. I think it's clear. Okay. Preparation of the petty cash book. Are you there? Preparation of the petty cash book. Where are we? All right, good. It said the entries in the petty cash book are summarized as follows. Money receipt. Debit is the total receipt column with any amount received from the chief cashier. So the debit side of the petty cash book is recorded with whatever we receive, whatever the petty cashier received. Debit is the total receipt column with any money received from any other source. Same goes to the debit side is always receiving side. That is the point there. Now, the money paid, which is basically why we open a petty cash. Payments. Credit the total paid column with any money paid out and also enter the amount in the analysis column for the particular expense. A brief description for the reasons for the payment should be entered in the detail column. So as soon as you make payments outside, you have to record it. You must record it. And you have to give details about the recording. So at the end of the period, add the total paid column, insert the total. Add each of the analysis column and insert the totals. If these totals are then added horizontally, they should agree with the total paid column. Your debit side must equal to your credit side. That is the point there. Balance the total receipt column and total paid column in the same way as balancing any other ledger account. Carry down the balance from the credit side to the debit side to start the new period. So the balance carry down. So the balance carried down, to make it balance, will be taken forward to the next month as balance brought forward. So when the interest is restored, enter as described earlier. So if you have spent 500 out of the 1,000, you have to get 500 to continue the next month. That is the interest system. You have to maintain the same amount of money that you started with in the petty cash book. So now we have a petty cash. Let's look at what we have. My trayer keeps an analyzed petty cash book using the interest system. The amount of interest is $150. That means she maintains $150. That's what it means. We provided the following information. November 1, that's the amount received
for the last month.
The amount received in the petty cash, $150. Yeah, $150. Yes. Now, on the 5th of November, she paid for window cleaner, $10. She bought pencils and pens. These are all the expenses. So how do we open it? Now, we'll go down. So in the petty cash book, what do we have? We have the debit side and the credit side. On the debit side, what do you have there? The amount of money started with the interest amount, which is $150. So you have your balance brought down as $150. Now, all the transactions has to go through the credit side. Window cleaner. So there are some transactions that are constant within the month that every now and then you have to go through those transactions. Those transactions, you can have a column for them. Do you get what I'm saying here? There are some transactions that are constant, that every now and then we have them. Look at what they make here. They have the cleaning column, the stationery, travel expenses, and the ledger account. Cleaning, basically they might have cleaners every now and then. That means they might need to buy things on the clinic every now and then. So they need a column for that because the transaction might be much. Stationery, it might have a huge transaction, though the amount of money might be less. But travel expenses might be taxi, might be, it might be different kind of transportation. It goes under travel expenses. Any kind of cost you have on transport goes through the travel expenses. I think that is clear. So we have the window cleaner for $10, the pen and pencils, which pens and pencils will go under stationery. The only thing you need to understand here is how do we place these transactions? Window cleaner goes under cleaning. Pens and pencil goes under stationery. H sign, that's the name of an account, a name of a creditor or a name of a customer. So it's a ledger. Yeah. So that means, why is it going to be on the ledger? Because you're going to have an account for those customers. You're going to have an account for those businesses. So any name of a customer has to be recorded as a ledger account because that customer would have its own account. Do you understand why we have the ledger account? There's a ledger account column. This column is for customers, businesses, because they have a name. It is not items. They are not items. They are people. So they need to have an account. Do you understand? Yes, okay. So H sign is the name of maybe a customer. Let's go back. Hold on, please. H sign, the credit supplier. So H sign is the credit supplier. We purchase from H sign on credit, right? So we paid H sign. So that means we have to have an account for H sign. We paid H sign $20. So we have an account for H sign. I think that is clear. Yes. Computer paper is going to be under stationery. Clear, right? Bus fare is going to be under travel expenses. A shama is going to be under ledger account. Office cleaner is going to be under cleaning. And that's how we balance our account. Any question about that? No. So the total amount here must be equal to the total amount on the debit side. So the difference between the total amount on the credit side and the debit side is what we call the balance carry down. The difference between them. So if the debit side is supposed to be 150. Now the credit side is 115. Do you get it? So 150 minus 150 will give us our balance carry down, which is 35. So December 1, this is November. By December 1, our balance brought down will be what? 35. The cash that will be available for us in December will be 150, as we have to maintain an interest system. Do we get it? Do you get it or not?
Yes, yes.
November ended with $35. So in December, we're going to have an interest of 150, but we have a balance carry down of 35. So it becomes our balance brought down in December. So
we're going to add 115.
Yes, you have to take 115 from the balance carry down. That will give us the cash that we're going to have in December. Is it clear? Any question about that? So we go down. So as soon as we are done with preparing the petty cash book, remember we said one of the purpose of the petty cash book is to prepare a ledger. Now we have to prepare our ledger account. So the ledger account we're going to prepare, we're going to have the nominal ledger. The nominal ledger contains different accounts that are not personal, like cleaning, like stationery, like travel expenses. These are non-personal accounts. They are not people, they are not human. So we put them into the nominal ledger. So we have the nominal ledger. So the cleaning account, we have to add all the cleaning. We go back to cleaning. The total of cleaning is $40. Yes or no? Yes. So cleaning would be what? So on the debit side of our cleaning will receive $40. That is why it's on the debit side. You know, we talked about the ledger yesterday. Date, details, folio, amount. Date, details, folio, amount. You debit the receiver, you credit the giver. Now, cleaning account has received $40. So you debit cleaning account. So the details will be what? Petty cash, because we are taking it from the petty cash book. The details of our ledger will be what? Petty cash. For cleaning account, what goes to cleaning account? The petty cash gives the cleaning account $40. So our details will be cleaning account, petty cash book. Do you get it, please? Yes. Okay. So then we have the stationery account. The same goes to the petty cash book. The total of the stationery account, the total $11. So we record it on the debit side. The stationery account has received $11. I think that is clear. Yes. The travel expenses, the total of $12. We record it on the debit side of it. Then we purchase the purchases ledger for H-Sign, because H-Sign is our credit supplier. We purchased from H-Sign. Yes or no? So H-Sign will receive $20 from us. So that is recorded. H-Sign's account, the purchases ledger. And also we purchase from Shama, who is also our credit supplier. We purchase from Shama, right? Shama would have received $32. And that is how we prepare our ledgers. Any question about it? Any question, please? No. So that's all about petty cash book. So what are the purpose of petty cash book? The purpose of petty cash book is to record all little amounts of money that the business is paying out to customers or to their clients. And as soon as that is done, the second purpose is we use it to prepare a ledger for non-personal accounts and personal accounts. Any question, please? Done.